Thank you, everyone, for coming today to my presentation. I'd like to give you a little bit of information on our company. We are a near-term production diamond supplying company. We do have a strategic alliance with Tiffany & Company, and we'll be bringing on, we're looking to put our new project into commercial production probably the first quarter of next year. Standard cautionary statements. Essentially, we are an established company. We've supplied diamonds to the world market for probably about 10 or 12 years. We have a strong management team with extensive experience. Most of our guys are 30-plus year guys. As I've said, we do have a strategic alliance with Tiffany's. Tiffany's is about a 6% owner in our company. And the project we're developing and that's getting ready to go into production is right next to and adjacent. It's coexisting with De Beers' flagship Venetia property. So Venetia is about a $4.5 billion spend from De Beers' side, and our plant and facilities, we have about 6,000 hectares right directly adjacent to them. Our plant exists about 1,000 meters from the actual pipe of Venetia. Now, this is a rare deposit in the sense that what it is it's a direct displacement of the top of Venetia. So it's essentially the same diamonds along with everything else and low capex that goes. Now, the current diamond industry, the opportunity is pretty compelling. Not a lot of guys follow it, but essentially a lot of the older mines are getting to the end of their lives. The current reserves, if you look at what's out there for diamonds, what's shown and what's being mined on a yearly basis, one can assume that there may be as little as 18 years worth of diamonds left. If you and I are to go out tomorrow and we are to find a new diamond mine, we're probably 7 to 10, maybe as many 15 years to get it into production. And then we're talking about a fraction of what's actually being produced. So there's no question that natural diamonds and especially high quality natural diamonds from non-conflict sources are definitely going to become more valuable in our opinion. And groups like Tiffany's, luxury retailers, they're trying to secure these types of diamonds from known sources for the long term and ensure their integrity of their supply chain. So we certainly see, especially in the gem quality goods, we see them increasing in value over the coming years without question. Now, our strategy really is a little different. We focus on near-term production. What we do is essentially take deals that groups like De Beers have that are non-core to them, but they're still production ready, or they make a lot of sense for a smaller company like ours. We acquire those, and we focus on projects with a high percentage of gem quality. We want low capex, we want strong economics, and we like to see growth potential where we get about a 15-year project out of them. We use the latest technologies. We use modular plants and that to reduce our operating costs and improve operational efficiencies. And of course, we leverage very key relationships with Tiffany's and other groups we have to minimize dilution and maximize our shareholder value. Now, the actual project that will come on, we expect to go to commercial production. We're targeting trying to do that early next year. We originally had planned to get it up and running later this year, but we've had some issues with water where we're going to put in some paste thickening technology, and that's going to drag it out a little bit to the first quarter of next year, we think. We are directly adjacent to De Beers' Venetia mine, and when we say we coexist, we share the airports, the security, everything else with them. So we very much exist in a bubble with De Beers. The deposits themselves are the result of a shift in erosion of the top of the Venetia pipes. It's low cost in that the deposit is from surface to bedrock, 15 meters, so it's a simple strip mining. There's no underground, no blasting, nothing like that, and it's really essentially just taking the material that was displaced off of Venetia and recovering the diamonds out of it and then rehabilitating. We are fully permitted. We have a 30-year mining right. We have all our water license and all our infrastructure in place. Obviously extensive development and infrastructure, as you'll see. And the 43-101 right now is saying there's about 1.4 million carats. By De Beers' calculations on what was displaced, as much as 50 million carats is possible. We're targeting about 3 to 5 million. That 1.4 million carats that we have is largely over a position or a land position of about 110 hectares out of the 5,800 we have. So there's certainly some growth left. Venetia, just to get an idea, this is definitely De Beers' flagship. They're moving to underground. It's about a $2.1 billion spend on top of what they've already got into it. At its peak from the open pit, they were producing about 750,000 carats a month from this facility, about 9 million carats a year. About 60–65% is gem or near gem quality, so it's extremely good quality. And there's large stones. Venetia to date, the largest is about 315 carats. And this is without question one of the most prolific sources of gem quality diamonds in the world. Now, when we look at this, is a De Beers document. If we look at this, what you'll see is this is the surface area as it sits today. This is the open pit of Venetia. De Beers calculation is about 1,000 vertical meters of the pipe at Venetia was sheared off and has been eroded off. Now, knowing the grade of that pipe quite well, we know that there's potential for about 50 million carats that's been displaced. So it's quite a unique situation. This is the only displacement from a primary source in the world that's been identified. So it's quite unique. Now, our land position, you'll see De Beers Venetia mine here. You'll see the inside security fence. Our position is all of this area, about 6,000 hectares. We know the displacement took place this way, came out, and so what we do is we simply strip mine along those channels. We've permitted the yellow area for an initial mining right over about 650 hectares. The total area is about 5,800. So as we identify all of these areas and start mining out, go into production, we'll start drilling and testing and trying to identify additional resources out there. To give you an idea, that 1.4 million carats, most of that exists in an area about that big. So there's a lot of work to be done here. This is just blowing up, that particular area that I was showing you. Once we take this area into commercial production, the pink represents bedrock to surface. The blue is about 15 meters in depth, and that's where a majority of the diamonds have accumulated. The flow came through this way, so we expect to see a lot more in here. In the 43-101, these are not quantified, these areas. Once this area goes into production, we'll then bulk sample these and we'll bring the number up accordingly. Infrastructure overview, when you look at it, we started out acquiring it from De Beers. We were selected by them to acquire it. About 550 holes were drilled to identify further on what their work had done. We've put in about 50 kilometers of roads, bridges, drainage, security fencing, gates, checkpoints, extensive dams. We've got 7 boreholes, about 20 kilometers of pipelines. This is the entranceway to Venetia. You literally come up on a paved road. You either go into Venetia here or you turn left and go through our security on this side. So quite a bit of extension infrastructure. We also are independent on not only water, but on our main power line we put in. We have backup power generators, worker housing for about 100 employees, full complement of heavy equipment, and the plant and facilities are very large. We have about a 500 ton an hour dry screening plant and about 150 ton an hour main processing plant that we use. The dry screening plant was developed over a period of a number of years. It uses German screening technology. We dry screen down to 1 millimeter. So what we do is we essentially recover the material. It's a very, very high content of sand. We remove about 60% of that sand, and then we haul it over to a main treatment. This facility uses 0 water. It's a dry screening facility, and obviously a very large one. That's all in place and ready to go. The main treatment plant, modern design, modular technology, DMS, deposit specific, pretty standard type of diamond plant. All the X-ray flow sorts, we have a 4-story facility with all the final recovery, security areas, everything else like it in there. So our current focus right now, when we look at short-term catalysts, obviously processing volumes, we've tested, we've done everything, we'll finalize the water, and we're going to see dramatic increases in the processing volumes going forward. We're going to see crushing and processing of large material, so that's going to probably increase our already decent dollar per carat that we're getting. We're going to see the operational costs go down as we finish the build. We're going to see significant revenues from large stones. If you look on the bottom, that's a 91.7. That's the largest one we've pulled out to date. That is exactly as it comes out of the ground. So there will be an initial production decision and additional growth that'll come in the very short term. So the key takeaways for us in our company, look, this is a proven team with significant experience supplying rough diamonds to the world market. We obviously are very proud of having an alliance, a strategic alliance. It's not an offtake agreement. It is a strategic alliance with Tiffany & Company. It's a quality project, extensive infrastructure. We're obviously at a key inflection point. Processing is going to increase, and I think the value proposition at this stage is quite phenomenal. In the end, 54 million shares issued and outstanding, about 3.5 million in debt. Stock price for all the Diamond Company plays are down. If you need any more information, I'm around at my booth, and I'm happy to answer any questions you have. Thank you.